Stocks were able to find some stability Tuesday after the previous day's big sell-off, but still managed to end the day lower. A flurry of comments from Washington did little to calm fears. The economy is still far from recovery, but the day's lack of bad news may have helped to calm the market. Federal Reserve Chairman Ben Bernanke told Congress an economic recovery depends on the government's ability to stabilize weak financial markets. Investors, however, are still worried the government may not succeed.
I think that if the market was hearing everything that they needed to hear, that the market itself would be moving quite a bit higher today. I think that really the market is just sort of holding its breath and listening to every word both the Treasury Secretary and the Fed Chairman are uttering, and will make their assessment as to whether we are getting more detail.
The Dow Jones Industrial Average ended the session down 37 points at 6,726. Broader indicators also were off. The Standard & Poor's 500 dipped 4 points to 696, and the Nasdaq dipped 2 to end the session at 1,321.
We really had no choice but to try to stabilize the system because of the implications that the failure would have had for the broad economic system.
Bernanke's remarks came as the central bank announced it will begin lending up to $200 billion in an initial move to spur consumer and small business borrowing for autos, education, credit cards, and other expenses. The Fed first announced the plan late last year. Mark Hamrick, The Associated Press.